What is up, traders? Welcome to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you become a better trader. Today we're going to discuss the XLK and what a day it was. Man, did we see some big green days in the risk markets today. So first and foremost, the reason I was looking to trade the XLK and not the SPY is simply because the XLK is the technology sector and tech has been getting, well, crushed lately. So I was looking for a bounce and we got that bounce today and it was a fantastic trade, and we're going to go over that in this video. So make sure you stick around. Now, I am going to be discussing traps in this video a little bit, so if you haven't watched the video I did on the smaller channel about traps, I will put a link in the description for you guys and you can go check that out. It is a smaller channel, so if you could subscribe to it and give it some love, I would appreciate it. Let's get into the video. So here we got the XLK on the daily time frame. You can see this bottom white line. I know it is a little bit dirty right now, but everything has a purpose and I'm going to go over that right now. So this bottom line is weekly support. That is your weekly support level. Let's go out to the weekly real quick just so I can verify it for you. There is your last and lowest bearish close on the weekly time frame. That therefore means it is weekly support, and you can see here that this week we did open above that level, penetrated well beneath that level, but ultimately closed above it. That is a very, very bullish sign. So back into the daily time frame we go. All right, here we are back into the daily time frame. You can see what a nice day we had today. It was a fantastic day. So why is this? Well, it's because of a short squeeze. The reason we have a short squeeze is because this is your lowest close on the daily. It closes right on that weekly support level, also becoming daily support as well. And then yesterday you got a slight close below it. So that's setting up what we call a trap, closing just below that support zone, looking for a move to potentially go higher, looking for this to be the trap that gets everybody short, so that way price can run all those stops and generate enough liquidity to get an expansion move to the upside. My final weekly target of this bullish move was around these two yellow lines, and you can see that we did not come into that quite yet. All right, so looking for today to potentially be a trap, we're going to go into the smaller time frame charts. Now, also another reason why I had a bullish bias is because of the dollar. Okay, the dollar has been steamrolling to the upside because that generally happens in risk-off environments. Whenever you have a lot of risk in the markets, people will tend to flee to the safer assets, if you will, and the US dollar is one of the most safest assets, being the world reserve currency. So we're going to go look at that right now. All right, so here we have the DXY. You can see here, this is an hourly chart, but order flow has obviously been bullish on this thing for quite some time. And today we traded up into resistance and then had this big bearish engulfing or outside range candle right there. So that is a perfect setup for potential longs in risk markets if the dollar has an engulfing downside candle like that. And this candle happened at the New York Open, which in the financial markets or in the Forex markets, the New York Open is at 8 a.m. Eastern Standard Time, and in the stock markets, the open is at 9:30. That's because the banks open earlier for trading currencies than they do for trading stocks. So we know coming into the stock market open today that the dollar showed massive weakness at the New York Open in the Forex markets. So going back to the XLK on the 5-minute time frame, you can see at the open at 9:30, this thing spiked up a little bit and had a massive bearish candle trading lower to fill that gap because we did open higher than yesterday's close. However, we did not open higher than yesterday's open. So yesterday's open was higher. So today's open migrated lower, and in a downtrend, that was another signal that you would potentially be looking for shorts. But with that trap candle staring us in the face and with the DXY selling off, I figured we would see a bounce in this sector. So when price traded lower, I always wait. I don't just take entries right at the market open. I let the market open and get situated, verify the open, and then trade away from it or trade above it, whatever it wants to do. This way I can get an idea of what I'm looking for into the rest of the day. So here we got a basing pattern down here for 20 minutes at weekly support. So I bought 151 calls on the XLK on the February the 4th expiration. That's next week's expiration. When I'm taking positions in the stock market using options for a day trade, I always buy at the money strikes and always a week or two out for the expiration. This way, if I have to set in a trade for more than a couple of days, I don't lose premium from time decay. So going back to the charts, so here we go. So I bought 151 calls looking for the high of day to be tapped, because the way I'm looking at this is if price trades back up into the high of day, then you will stop out any shorts that got short this morning looking for short side continuation. And then once that occurs, once you get above today's high, then anybody who is short is stuck and they will have to close those positions, bringing in more buying demand, and we could potentially see a short squeeze on the day. And that's exactly what we got. So when I purchased those 151 calls, we did get a nice bounce immediately right back up into the previous day's close. That is support. Going back out here to the daily, I will show you what I'm talking about here. I was using this candle as support to mitigate my risk, essentially. I wasn't looking so much at yesterday's close as I was the previous day's close, because the previous day's close was higher. So I was going to use that as a risk point, meaning if price cannot maintain closing above that area, then I will close out those calls for a slight profit. This way I don't lose on the trade. I never want to take a losing trade. I mitigate my risk that way. Never, ever, ever sit in a losing position, guys. You can always close that position and re-enter later. Never sit in a losing trade. So with that being said, when we started to trade back away from the price that I was looking to exit, if we would have started closing 5-minute candles and looking like we were going back down to the weekly support, would have closed that trade out, but instead we did not. We traded up and got a nice bounce right here. This is where I started to feel really, really comfortable about my position. Once we started trading up and we got above the high of day, I started to shed some of those calls, because I trade the same way in stocks and crypto and Forex. My strategy, I do the same across all asset classes. So closing 2/3 of the calls out at the high of day, as that was my target, I sold them for $6.40. I bought them for $3.90 at the money. So when I bought them at 151, we were trading at $151. I bought them, they were down here at the money, and then at the high of day, I closed them out at 640. So from 390 to 640, that was the profit that I logged on those calls. With the calls that I am still holding, obviously, I will let those expire, either worthless or I will just let them close out. I got a whole week to sit on these things. And I've already taken my profit, so my job is done as a trader. I booked a nice gain today. So I'm playing with the bank's money at this point. It really doesn't matter to me what happens to that unrealized P&L. But you can see once we did get above that high of day, like I said, the shorts were stuck. We did trade back into the high of day to give them a little bit of relief, and then immediately traded all the way up into the close today. Was a straight line, straight to the top side. This is a nice little short squeeze. Fantastic trade today, guys. Fantastic stuff, all because we pay attention to these markets, right? So hopefully you learned something today. I will get into more option strategies and stuff like that later on down the road. I just want to get people, mainly right now while the channel's small, focused on the strategy, because it really will help your trading tenfold. So with that being said, thank you so much, guys, for being here. Thank you so much for clicking on the thumbnail. If you're still here at this point in time, you rock. Make sure you guys trade safe, make sure you trade smart, and as always, happy trading, everybody.